Hey, okay, I'm back. So today, I think we just want to look at the next few quarters and see if there's any negative catalyst or any unforeseen Black Swan event. Black Swan event is something that is something like COVID or for example, the dot-com bubble in year 2000, where such big event or the Osama bin Laden aeroplane crash, and which is just or Taiwan being invaded by China and causes market to crash. I don't see anything that is unpleasant that may happen. The chips war is still going on between US and China, but as you can see, the Huawei phones now with the 7 nanometers chips, but there is no way to near to Apple and all that chips in their phones and in other different devices which are at 3 nanometer, and then US are investing giving a lot of subsidy funds to Intel to become one of the biggest fab companies in the world, so that they don't have to rely so much on the exports from the Taiwanese TSMC. So US are pretty much very much self-reliant in terms of natural resources as well as chips from the design aspect to hopefully in the near future, which is the actual production itself as well, because they noticed that during the COVID there were a lot of raw material shortages as well as consumer products shortages because of shutdown or probably hard-handed tactics behind the scene happening in China for not wanting to export stuff to US and using COVID as an excuse and causes inflation to spiral up for Europe and China, so never know what they are doing behind the scene. So you look at the current this one of the news for September is, of course, ECB, European Central Bank, they raises the interest rates as well, again on the 10th consecutive time. A lot of analysts in US are saying that there won't be any more rate hikes by the US Fed, but this might change the dynamics a little bit, because usually whatever ECB and US, whatever they do, they kind of mirror each other. But I believe this time US may act a little bit differently, because ECB is different, because ECB rely on it's kind of like also became part of the war, not just Ukraine and Russia, because the entire Europe, rest of Europe other than Ukraine, rely on gas pipelines from Russia, which has been cut off. So oil and gas are the cost for everything that you produce or any services that you need to sell. So I think ECB is slightly in a peculiar situation, which actually benefits US, because US becomes a net exporter for oil and gas to them. So just to let you know. And then other things that I wanted to share with you is, of course, this is the news of the announcement like 6 days ago about ECB raising the rates. And then major central banks are on the brink of big rates, but inflation battle might not be over. I believe this is just a hype, just to mainstream media to get investors not entering the market and all that. But I believe that this is definitely the last, should be the last for ECB, and there won't be any more hikes for the US. And then if you look at major trading partners, Mexico also is becoming the number 2 now, beating China at 322 billion. Mexico's trade US is 462. So they are actually making their next door neighbor using railroads. I will talk about railroads company in the near future, about the potential of North American railway companies that are very important for logistic purposes. And then China's trade with US has already declined, which is a good sign for US. Then, of course, in terms of technology stocks, market are still not really coming into technology stocks yet, other than the Magnificent Seven, Nvidia, Meta, and all that, But if you can see the value stocks like traditional company like Coke and some building, construction, hotel companies, their share has already been bashed down quite a lot, going down trend, and then that makes the dividend yield going up. Sometimes you can buy Coke and you get a 3%. It's very unlikely. Usually Coke will give you like a 1% yield and all that, So the market, equities market hasn't actually broadened yet, other than the Magnificent Seven. So, and also funds are actually not coming into equities also because of the Treasury market. Treasury market are giving it 4.33% compared to 4.29%, and many funds are going into the US Treasury 10-year bond, 5-year bond, and 2-year Treasury rates bonds, which are very interesting, so very safe. So this is the US Treasury charts at 4.31. Very good. You put 10,000 and you basically get 400 per year, which is better than putting in the equities market where your capital value may drop. So talking about US being a net exporter of crude oil, and it has become a net total energy exporter since 2019 up to the early 50s. So US is in a better position now. They won't be so much affected by the BRICS or the OPEC now. As you can see, oil prices now are hitting $90 because the OPEC countries are cutting out production, and maybe they are quietly behind the scene trying to gang up and to keep inflation high, and all that. So let's see, but I don't think it will affect US very much. Plus, US also posed to become a next exporter of crude oil in 2023. This is all pretty good news for US. And talk about gas, 4 countries, France, UK, Spain, Netherlands, accounted for a combined 74% of US LNG exports to Europe. So this is something that are very strong as well. So especially the winter months are coming. So as you can see, pretty much there are quite a lot of good catalysts happening right now for the equities market, and you're buying at pretty much at a low point right now, and definitely markets are not frothy. So invest fun and invest safe.